The crypto market just went through a historic liquidation event. Investor sentiment is shaken and fear dominates the space. So, does this mean that the bull cycle is over now? Or was this the ultimate shakeout before the real bull market begins? This October could mark the beginning of a new chapter for Bitcoin. I've organized my thoughts clearly, and by the end of this video, you'll have everything you need to decide for yourself. Hey guys, it's JC here. So last Sunday was insane. Yes, it's been a few days, but honestly, I'm still processing it. I also got stopped out on a decent chunk of my position, and since I started trading crypto back in 2021, I can't remember a single event that shook the market like this in just less than an hour. So for the last 2 to 3 days, I took some time to step back, analyze again, and build my own conclusions about the current market. And now I've combined all the key data and scenarios to figure out where Bitcoin could go from here. And if you find this kind of deep analysis valuable, please hit like and subscribe. It really helps the channel. First, let's quickly review my previous Bitcoin outlook. And at the time I posted that video, Bitcoin was around 121K. Back then, it had formed a double bottom, broke above this neckline with strength, and made a new all-time high at 126K before pulling back slightly to 121K. My view at that time was pretty simple. When a strong bull run begins, price often explodes up so quickly that it doesn't even return to retest this neckline. That's because all those who missed the move are waiting right there at the neckline to buy. So I said the chance of a neckline retest was low. But of course, if price did return to this neckline area, I was ready to buy more there. However, since I knew that a lot of retail would be waiting at that same level, I also said that if we do retest the neckline, there's also a chance of a deeper drop. That's why I set my stop loss fairly tight below the 120-day moving average. In terms of price, it was around 113K. This tight stop helped me avoid this massive crash that followed, but since I was holding a larger position than usual because I added more at the neckline, the total loss was still not small for me. And I think it was the largest stop loss I've taken in a long time. But anyways, for those who kept tight stop loss levels, you probably avoided the worst of this crash. But for everyone else, it was a brutal day. Trade tensions between US and China escalated. Binance glitched at the worst possible moment, and the big players loaded shorts into the chaos. From a retail trader's point of view, it was so frustrating and hard to accept. But honestly, what can we do? This is the reality of the market. Even if we suspect manipulation and market feels rigged, we came here to make money, right? So let's try our best to stay focused on that. You know, sometimes trades hit, sometimes they don't. But at the end of the day, the only thing that matters is being the one who walks away with profit. Okay, enough of the recap. Let's move on to today's outlook. Let me start with the conclusion. I don't think the cycle is over yet. In my view, there's still at least 1 or 2 more upward waves left. The first reason is simple, it's the market makers' positions. So we saw an algorithmic short squeeze that left a deep wick on the chart, which means that the big players accumulated heavily down below. And those players will eventually need to take profit on what they bought. So even if they entered around that low 100K range, they will want at least a 15 to 20% move upwards before unloading their positions for meaningful profit. And that alone gives plenty of room for price to reach around 119 to 121K range. Whether we go beyond that and print new all-time highs will depend on whether fresh catalysts appear. But for now, I think the push towards 119 to 121K is achievable from just profit taking by those big players. However, that scenario only holds if the recent local bottom at 101 to 102K stays intact. If that level breaks, then this recent bounce would be just a dead cat bounce. And from there, it's anyone's guess where the next support would form. The second reason is the weekly Bollinger Band retest. If you look at Bitcoin on the weekly time frame, the zone that provided support during this major crash was right at the lower band of the weekly Bollinger Bands. Based on the typical 4-year cycle structure, that lower Bollinger Band has consistently acted as a strong rebound zone, which means every time Bitcoin touched it, a significant recovery followed not long after. So if we take 2023 as the start of this current cycle, first in August 2023, Bitcoin touched this lower weekly band and then resumed this uptrend. And in July 2024, it retested the same level, but then the yen carry trade crash briefly broke it, but recovery followed soon after. And in March and April 2025, during the first tariff war, price hit the lower band again but bounced hard. And now October 2025, we just tested the same level once again. So given this repeated pattern, if the broader bull market isn't truly over yet, then it's reasonable to expect another meaningful rebound from this area. And the third reason is the three market phases forming on Bitcoin chart. So the three market phases, this pattern helps identify how big players and market makers accumulate and distribute their positions. For those unfamiliar with it, here's a quick breakdown. First is the consolidation phase. So after a pullback, price moves sideways, forming a consolidation range, a box. And then it briefly breaks above the range to trigger short liquidations and lure in breakout long entries. Next, it drops back below the range to trigger long stop losses and inviting new short entries. And finally, it reverses upwards again, trapping both sides. In short, it's a manipulation pattern, a setup where market makers shake out both longs and shorts before the real move begins. Now with that in mind, if we look at the current Bitcoin 4-hour chart, we can see that this behavior is unfolding. Price pulls back and starts consolidating in a box range and briefly breaks out the box range, stop out shorts and attract new long entries, and then drops below the box, flushes out those longs and bring in fresh short chasers. And now price has re-entered this range. And in order to trap and liquidate those new shorts here, the price would need to push back above the upper side of this box range again. The fourth and the final reason is psychological. And I know it's a sensitive topic after such a massive liquidation event, but the truth is that retail sentiment right now is completely crushed. Many traders are scared, frustrated, and deeply distrustful of this market. They have seen forced liquidations, exchange issues, and manipulation that make them question whether it's even worth staying in crypto. And in fact, it's not just retail. Even some institutions and the market makers took heavy losses during this crash. In other words, the market has been fully deleveraged. And that's actually the best possible setup for a new rally if the next upward move is waiting for us. And when the market eventually turns up again, those same retail traders who swore they were done will slowly start coming back in, and that's when the correction will slowly start to appear. The pattern never changes. Fear at the bottom, greed at the top. That's why history always repeats itself. So to wrap up today's analysis, here's the conclusion. First, the insiders, the institutions, and the market makers behind this massive crash most likely profited from their short positions and reaccumulated heavy banks near the bottom. And to realize profits from those positions, they will need roughly a 15 to 20% rise from the lows, which points to around 119 to 121k level. That's likely where they will start distributing some of their holdings. Whether that becomes the cycle top or just another leg towards the new all-time highs will depend on future catalysts. However, for this scenario to stay valid, the previous low must hold. Personally, I entered a long position around 109k yesterday, and if we see another meaningful dip, I plan to add it. My stop loss is set right below the previous low. 2. On the weekly chart, Bitcoin has just retested the lower Bollinger Bands, a level that provided major rebounds over the past 3 years. And 3, we're also seeing signs of the three market phases, a manipulative setup used by market makers to wipe out both sides before reversing, consolidating to make a box range, briefly break out the box range to liquidate shorts and invite new longs, and pulls back below the box now to liquidate longs and invite new shorts, and now back into the box range. And if this pattern completes, it supports the case for another leg upward. And lastly, from a psychological standpoint, the recent liquidation wiped out leverage and crushed market sentiment. Ironically, that creates the perfect condition for market makers to lift prices up. Many retail traders have left, but once price starts recovering, they will slowly start to return, buying back at higher levels. And that's how this market always repeats. It's a painful truth. And one last thing, if you sign up on BitGet using the link in the pinned comment, my code JC777 automatically applies, and you'll be able to get a 50% trading fee rebate on both spot and futures. So that's basically half of your trading fees that you pay is going straight back to your account, just like a cashback. So make sure to take advantage of it if you're trading actively. Thanks a lot for watching, and please don't forget to like and subscribe. I'll see you in the next video.